Hey, what's up traders? Welcome back to the channel. In today's video, I'm going to be doing something a little different to the past few videos I've been doing. And that's because it's just a simple tool that I've built here to assist with day trading. So what you see on my chart right now, this white vertical line is the beginning of a new day's trading session. So this is the very first bar of today's trading. And the middle white line is today's opening price. The red line is yesterday's high and the blue line is yesterday's low. And this aqua line is, you can see there's two aqua lines here. These two lines are the 5-period daily ATR multiplied by half. So this is a half ATR, half daily ATR distance from today's opening price. One of the most important abilities of a day trader is their ability to predict how much a market can move in a given day. Because you tend to open and exit multiple trades in some cases, but usually even if you open only one trade, the whole point of day trading is to have that trade closed by the end of the day. So how do you know where to close your trade? Well, there's obviously infinite exit reasons you could have, but one important factor to consider is how far has the market moved today in relation to its most recent volatility. So here, if price action comes up to this line here, then I know that we have exceeded a half 5-day ATR distance. So the ATR is adding up the past 5 days. And we know that if on this 5-minute chart, price action gets up here, let me change this to 1 ATR. Now, this is quite rare that a market would move a full ATR in a day. Hey guys, while editing this, I realized I should probably substantiate that claim. So I just quickly made a little script here that counts in the red number here, how many bars on the daily chart printed above the 5-day ATR. You can see there's a 41% chance of that happening. So it's not necessarily rare, but it is uncommon that a day will print a higher range than its 5-day ATR. And we know that to be true because we know that markets tend to consolidate more than they tend to trend. But anyway, just wanted to make sure that I'm not saying things that aren't true. So let's get back to the video. So it's going to be rare that the market will move this entire distance in a day. That's why I prefer to set it to something like 0.5 or 0.6. That's much more conservative. But now we can reference today's opening price throughout today's trading session. You can see that once we opened and we trickled up here, we retested it and took off from there. So there's a good chance this could act as support if price comes back down here. Same with yesterday's low. So we have a zone here to reference for potential buying opportunities. We haven't sort of a recent impulse leg here. We are in a downtrend, so you might not want to be looking for long trades, but again, day trading, we're not too concerned with the long-term higher time frame trend. We're just concerned with the very most recent price action, especially on these lower time frames. For swing trading time frames, yes, the longer term trend is important, or directional bias is important. But when you're day trading 5-minute chart, there's so much noise in a given day that it really doesn't matter that much what your directional bias is. You're just trying to capture little swings in the market. And just to quickly demonstrate this concept, this is Matt from the future recording this. A new day has begun trading, and I recorded this video that I'm editing yesterday. If I throw on the bar replay tool to a bar just before today's trading began, these are yesterday's levels. I was recording around this time. You can see that the market did in fact test this aqua line, this 50% 5-day ATR, and it also retested yesterday's high. And now we're consolidating up here. So if I was day trading yesterday, which I wasn't because I was recording videos for the mastery course, I can see a setup here that would have caught my eye, would have been interesting, maybe a tradable opportunity. You can see we had a triple top here intraday, and then we finally broke through that. If I were to go long on this breakout, I'd probably have a pretty tight stop being a day trading setup. You can see that this line would have been a great spot to potentially take profit when we started to struggle. Now in this case, this is a 60% ATR. This is just an arbitrary number. This is just to be conservative because we know that 40% of the time the market will not move a full ATR during the day. So having a lower ATR multiplier makes sense to be more conservative. Even if we say it's 70%. When the price action tested this range, this area up here, and started to struggle, this would be a great spot to take off some risk, take some profit, move your stop to break even maybe under these lows, and then see if the market can continue higher. It in fact did. And then we got this nice big double top here. Had I been involved in a trade here, this sort of candlestick pattern, a swing high bearish engulfing candle, is a pattern I like to trade because it's a simple rules-based pattern. If we throw on an RSI here, I can guarantee this market would have been overbought at this point. Yeah, there we go. We have a swing high bearish engulfing candle at yesterday's high with the RSI overbought. That's a classic exit reason that I use very frequently, especially with this double top and RSI divergence. Great place to take off a day trade. Now a swing trade, you might want to hold that position because it looks like we might break out today to new highs. But we're talking about day trading here, intraday trading, not holding trades for multiple days. So anyway, that's what this tool does. Let's break down the source code. So we're just dealing with a regular indicator here. Overlay is set to true, so we're drawing over price action. We're getting some user input. We're getting our higher time frame, reference time frame, our ATR length, and our ATR multiplier for drawing these blue aqua lines. Next thing we're doing is creating a non-repainting security function. This isn't necessary. We could just use this line of code on these 3 lines here. I just happened to base this script off a higher time frame indicator. It was my high time frame high/low. That's a public open source script, I believe, if you want to check that out. It's very similar to the script, except that it draws the daily high and low on all price action. This particular script only draws the most recent days high and low. That's just to reduce clutter. If we're drawing these lines over all of the bars in our chart, we get pretty overwhelmed with too many lines. And so the way I've written the script is it only draws the most recent days levels. Now with this non-repainting security function, I actually read through the documentation recently and found this version of the non-repainting code. It's pretty similar to mine, but let's stick with best practices and we'll use the code from the TradingView documentation here. Paste those custom function parameters into the security function parameters here. So I'll leave a link to this documentation under the video if you want to read about this. I don't want to go into this in today's video because it's quite a complicated subject that I've covered in the past. So go and check the videos on my YouTube channel if you want to understand this subject more intimately. But for today's lesson, this will do. All you need to know is that this code here will get the daily charts high and low without repainting. So let's save the code and make sure that that is in fact what's happening here. Yep, perfect. So the non-repainting security function means that it's not going to get today's high and low. It's going to get yesterday's high and low over real-time price action. Repainting is a misleading term for some of the behaviors that our scripts can do when referencing higher time frames. But for today's lesson, all we want to do is draw yesterday's high and low over today's price action. This function achieves that. So the next thing we need to do is get our higher time frame price data, if you're Australian. We have 3 variables here: higher time frame high, higher time frame low, higher time frame ATR. So to get the higher time frame ATR, we pass in a price source just like we would to get the high and low. But this price source or this expression is the inbuilt ATR function with our ATR length input. So 5 period ATR by default from this resolution, from this time frame, the daily chart, from the current symbol that we have loaded on our chart. And then we multiply that ATR value, that daily ATR value, by our ATR multiplier input. Now that's all the information we need to plot this information onto our chart. So let's move on. Now this is completely optional. I couldn't, as far as I know with Pine Script, there's no way to just draw a vertical line like this. If you hold Alt and press V on a Windows computer, that will just drop a vertical line on your chart. And no matter how far you scroll out, that vertical line will draw all the way to the top and bottom of your chart. However, when it comes to drawing lines on our charts, which is how I achieve this vertical line here, we can't tell Pine Script to extend that line indefinitely up and down for whatever reason. You can only extend left and right. So I came up with a cheeky solution here. Because I don't know what price scale is going to be on our chart, what I've done here is just write a little block of code that stores the highest price that this chart ever reached. And then we draw our vertical line from that highest price down to 0. So it extends indefinitely to the downside, well, to 0, but to the upside, it only extends to the highest price that our chart ever achieved. Now, I could probably get rid of this, to be honest, and instead of using the highest high, I could just put in something like 9999999. Let's save our code and see that compiles. That might be too many 9s. No, there we go, perfect. So I might just leave that as it is for now, because I doubt anyone's going to be trading a market that has a value higher than this. But if you do, just keep this block of code in your script and it will work just fine. But for now, to keep things simple, let me get rid of that block. I can also get rid of this debug plot code. Save my script, and perfect. Now that we have our higher time frame information, I now need to change this comment to new day and line variables. What we need to do now is store the line object for all of the lines you see on my chart here. Now, I can actually get rid of this new day boolean. That doesn't actually get used in the script anywhere, I'm just noticing. So there's a bit of tidying up there. So the first thing we need to do is store all of our line variables. I can change this to open price and line variables. So open price is going to store the opening price of the first bar in today's trading session. Then we have 1, 2, 3, 4, 5, 6 lines here. So that's 1, 2, 3, 4, 5, 6 includes this center line, this vertical line. That's new day line. And then we have open price line, which is this middle white line. We have upper line, which is this line here. We have lower line, which is this lower ATR line here. Then we have yesterday's high and yesterday's low. To make this a little more intuitive, I'll add ATR in here. Upper ATR, 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 ATR. Save that. And I'll also add line on the end of these two. So before we draw these lines on our intraday price action, we need to get the ATR ranges. So this is our ATR high and our ATR low. So to get that, we simply get our open price, this white line, and we add our higher time frame ATR to that line and subtract it for our ATR low line. And that gives us our day's potential volatility range. At the moment, I've set this to 60%. So these lines are representing 60% of 1 5-day ATR. So we've had some pretty strong trending price action in the past 5 days. So our ATR is quite wide. There's no guarantee that price action will move this far today, but it's a reasonable estimate that at the end of today, there is the potential that price action could fall this far or rise this far, and obviously could even exceed that significantly. But at least we have some price targets to reference. Like for example, if we get down to these lows here, that would be a 60% ATR move. That could be a great place to take profit on any short positions that we may be lucky enough to capture falling towards this line. For example, if price action does break this low, retest it, we get short, we might want to try and hold this trade if we can, maybe with a trailing stop, until we get down to this line here. And then we could potentially take off all of our position or part of our position and manage that trade much more conservatively when we get down to the 60% ATR move, especially in conjunction with previous important structure levels. But anyway, this is not a trading lesson. This is just a trading tool and an example script. So let's wrap up today's lesson with all of the magic that draws this stuff. So first we need to detect a new day. That's done using the change function in the TA library. So ta.change will detect a change in the time of the daily chart. And what I should probably do here is change this to our res input. That way, if the user wants to plot weekly timeframes, weekly levels, or even 4-hour levels, let's have a look at what it looks like with a 4-hour level. Let's change this to 4 hours. There we go. So now we're plotting the most recent 4-hour bars levels and the 4-hour 5-period ATR levels. So you can see this is quite an interesting little tool. It's a simple tool, but with a bit of creativity, it could make for a pretty useful intraday trading tool. So once we detect a change in that higher time frame bar, we then save that bar's opening price. So in the case of these current settings, a new day began on this bar, so we saved that opening price. Remember, the opening price is used to calculate our ATR levels up here. And I'm just realizing we don't actually need these ATR high and low variables here because they're actually overridden here anyway. So I'll get rid of them. Let's keep the script as lean as possible. And yeah, so we're saving the open price. We're deleting all of the previous lines. So on this day, wherever this day started, this one started at 7 a.m. So this day would have started It's 7 a.m. there. All of the lines that we're drawing on this previous day get deleted when a new day is detected. So we delete all of the lines on the previous bar. That's what this little historical operator reference is doing. It's deleting all of the lines on the previous bar and then recreating them. To create a new line, we just use the line.new function. We pass in the bar index that we want to draw the line from. So in this case, that's going to be the bar index of the first bar of the trading session, which is this bar here, where this white vertical line is. And then we need to pass in a price. So let's cover our price lines first. For our open price line, we just pass in the opening price, and then we need to tell it. So now we're telling it to draw a line starting here, and then we tell it to draw it from this bar index to one bar index ahead. So we're drawing the line from one bar across to the next bar. And then I've passed in the extend.right parameter to all of these lines. And so the line is being extended from here all the way to the right indefinitely. Same for all of our lines. So we have our upper ATR line, which is doing exactly the same thing, but we're adding our higher time frame ATR to that and subtracting it for our lower ATR line. We are drawing yesterday's high and yesterday's low, extending all of these to the right. And that's how we get these lines on our chart. And then this new day line is doing exactly the same thing, but we're not extending it because we are drawing it from 9999999 all the way down to 0. And that gives us this solid white vertical line. And that's it for the script. Pretty simple. I thought it was a pretty interesting tool that some of you might find helpful in your own trading. You can obviously build a whole strategy around this if you wanted to by building on this script. But for now, that will do it for today's lesson. I hope you found it interesting. If you want to learn more about Pine Script, check out pinescriptmastery.com, and I'll speak with you in the next lesson. Take care and best of luck with your trading.